Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Tuesday morning pre-market webcast. Your S&P 500 E-mini futures daily chart. And what you can't see on this chart is the monthly pivot, which is coming in on our stuff at 2099.80. So depending on how people do the calculations, it's coming in somewhere around the 2099 area for June. That was the area where we bounced yesterday morning about 10:30, created a very nice dip buy long that we were able to capitalize on in the room. We shorted into it. We longed out of it. It was a really nice move. What we're seeing in the overnight is a move down to 94, but then they've given it back up, back through 99. They've gone all the way back up to test. You've got the daily pivot sitting at 2109.83. You've got the weekly pivot sitting for us at 2108.70. You've got the middle band on the daily chart sitting up at 2110.53. So it's still that band that we were talking about yesterday that was so key. That band that stretches from the weekly pivot to the mid band, and again for the second day in a row, we've got the daily pivot in between. That's been that tried to act as resistance yesterday. The bulls broke above it. They went and did 1775. They came back down in the overnight, and the bulls lost all of those levels. Lost the middle band, lost the daily pivot, lost the weekly pivot, lost the monthly pivot, bounced off 94, and they're getting it back. So we see a real battle in here over both the monthly pivot, the weekly pivot, the middle band, everything in between. If you zoom out, which is why I like to use longer time frames when I'm planning out my day, what you see here is where the red line here is the 50-day exponential moving average. What you see here is you saw it hold back on the 26th, back on Tuesday to open the week with the bounce off of 96. What you saw last night, though, was a break of 96, a break of the 50, and a lower low down at 94. If the green line here, the mid band on the daily chart, holds as resistance, and it's trying to this morning, it was tested around 6:30. It actually, went up to 0975 and stopped at the daily pivot and came back through. If this holds out for the remainder of the day, and the bears can continue to press their advantage back towards the monthly pivot, and in an ideal world for them, convert that monthly pivot and close below it, then for me, what you have opening up here is a trip to the lower band. And you have to look at it from both sides. If you're a bull and you're trying to buy a dip, we had a great one to buy yesterday, and I bought it, and you were up 20 handles, okay? We had taken profits, we had our runner, and those runners ended up, we ended up having to take them off. Came all the way back down. So from that perspective, as a bull, as a dip buyer, there's a point where you're going to say, okay, if I can get a better entry down at say 2080 to 2075 on a move to the lower level, you know what? Take it there. I'll be there. Market's not going anywhere. And that seems to be the mentality that's kind of setting up here, because they're not able to hold the dips. They're not fighting to really defend the mid-band the way they usually do. And now we've lost a key exponential moving average. So you see the high here up at 2034, and you see this slow, gradual decline. And if this were a stock, if this were anything else, you would say, okay, upper band, middle band, lower band. So we need to keep it simple. And the longer we persist below the mid-band, the more and more likely that's exactly what we do. All right, everybody have a fantastic day. Follow us on Twitter at Princeton Trader. Check out the website, PrincetonTrader.com. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.